going on, guys? What's going on, guys? Give me a 1 in the chat if you can hear me all right. Spam a 1 in the chat if you can hear me. I want to make sure the audio is good. All right, bet. Perfect, perfect. I don't want to be like ICT and record a whole live stream like no audio. If the quality's bad, let me know. I can fix it. But if you can hear me all right, that's perfect. Okay, so this live stream, I want to make it kind of shorter than last one's. Last one went like an hour and a half, hour 45. So I'm gonna try and go through the trade I took today. That was a nice winner. I didn't catch this whole move, but I did get in short like right here. So I'm gonna show you what I saw this morning, and then we can review some price action on the way down, and then answer some questions. So let's get into it. So first thing I like to do, obviously, I have my chart set up like this: an hour, 15, and a 5. And this is like one of my presets, right? I got opening gaps. I got my 15-minute daily highs and lows, right? So this is what I look at first. I look at these two first, and I look to see what gaps were near when I wake up in the morning. And I look to see, have the highs been taken or not in the previous day. And so what I like to do is I'll go on a daily chart, right? And so I see we had a nice consolidation day, and I was not expecting this huge drop today because we did, NFP is tomorrow. And so I was kind of looking to see if we want to return on this daily fair value gap, which we did. But the main thing I was looking for this morning was to see which liquidity we were going to take first, because I always mark out midnight open first. So that would be right here. Let's just make that purple. And midnight, right? So you can see around, let's say 8:30, we had the unemployment come out. So this candle right here, so we can mark that. So there's 8:30. And so really the only liquidity I see that's important before 8:30, right, is these highs and these lows. So we're just consolidating, right? We're just accumulating. So we're looking for that manipulation. And so I have this nice little indicator called boxes, right? And it lets you see, here's the Asia session. Here's the London session. And then here is the New York session. And so I saw we took Asia lows right here. And this kind of looked like accumulation, a little bit of manipulation, taking out Asia, come down, hit this order block right here, right? And we end up taking buy side first, so above this previous day's high. So we're taking the previous day's high out. And so that looks like a Judas swing to me, right? I'm looking to see if we take buy side first, that's not good if you're bullish. You want to take sell side first. And so there's probably stops piling up below here and below here as well. And so we didn't even dip down into those. And we just went straight for buy side. So that was a little telling to me. I said, I'm not trading the news. I want to wait, especially on an NFP week. So we come up into here, grab buy side first. So that was a red flag for your bullish stance. And if you look, actually, another indication that, if you are bullish, you want to see, here's 8:30 open. I'm going to take the boxes away. Make that 8:30. I'll make this dotted as well. So you have the day starts, you have midnight open, price goes below midnight open, and 8:30 opening is right here on this candle, right? So when 8:30 open, I tweeted this earlier, when 8:30 open is below midnight open, and your bias is bullish, that means you're in a deep discount. So price is already below midnight open. So they didn't really need to drop it down below 8:30. We're already in a discount. So what are they going to do? They're going to take it straight up into this buy side here. And so what they're doing, in hindsight, it's obvious, hindsight, is they're accumulating shorts above this previous day high. They're also digging into this fair value gap right here. I know it looks wonky because I have the lines, but they dig into this fair value gap here, come up, almost hit consequent encroachment of it if you want to do the little measurement, right? Doesn't even hit it, so that's a pretty bearish sign as well. We don't even hit CE. So we dig into the daily fair value gap, hit buy side first. So I was looking for shorts after coming up here because higher time from order flow has been bearish. And so I'm going to get to my trade in a second. I'm just kind of going through what I look at in the morning and why my bias, I wasn't trying to long up here in this premium. Because that all matters, right? It's all about narrative. Where is smart money pairing their orders? Where are they getting in? Who are they trying to use as liquidity to get out? So you got to be thinking about all that stuff. And the thing I like about trading, especially ICT concepts, is that it's almost like a puzzle each day. You got to figure out where the market's going to go, what's the draw, who's pairing orders with what, and at least little clues like this, 830, which liquidity you go for first, things like that. So it's fun to put the pieces together. And so I'm just going to translate all that into, it's not an indicator for highs and lows daily. I just do it manually each day. Just separate vertical lines at midnight, and at the end of each day or the next morning, I'll mark out the highs and lows. And I'm gonna answer some questions later, but let me get through this and then we can get to the questions. So anyways, moving on, we also had a gap up here as well. So I'm just gonna go in and I'm gonna mark out my liquidity levels like I would any other day. So we had buy side above here that we took out. Okay, so equal highs, pretty easy. And then we had sell side, obviously, below here. I use pretty thin lines, so if you have trouble seeing them, let me know. I can make them bolder. That's sell side. Okay, don't even worry about this whole move yet. I didn't catch any of that. I did catch the beginning of it, though. So let's get into here. You do have a little fair value gap here. But this is kind of what I was watching, and I like to stay in the 15 and the 5, and I'll narrow in with the 1 if I can. But especially when we're in consolidation like this, I like to look at the 5 and the 15. So you have a nice little bullish order block here. Make that nice and neat. And we take buy side, okay? And so I'm not trading the move initially. You saw ICT get in. I think he got in like on this fair value gap. Yeah, I was watching this live, but I didn't want to trade it. All right, so he gets in on this fair value gap here, and I think he takes it all the way up to buy side here. I can't remember what his trade was, or maybe it was this order block right here. I know he's mapping it out, but anyways, price moves higher, and so we end up taking buy side, retrace a little bit into that new day opening gap that he talks about. So let's just do this. Let's make it blue. Actually, order block's blue. Let's make it like yellow like he did. And if you look, CE, right? Let's make the CE red. And go back to electronic. So here's that opening gap, and here's the CE right here, right? So price comes up, and it looks like I'm pretty much going over what ICT already did in his live trade on Twitter, but it's good to go back through it and relearn or see if there's anything you missed. So we come back down. If you want, you can look at OTE, come back down, hit the 62% retracement, hit CE, the opening gap, new day opening gap. Just do in DOG. And look what happens. We rocket higher, okay? And so we end up filling in almost to CE, that daily fair value gap. And if you look, what I like to do is I'll go back to the open. I always, like I said, look at the opening gaps for what we're close to. So we already breached back through here, so we're probably gonna reach for this one. So let me just paste that on here like that. And so I kind of like to keep my chart clean. I don't like to have all these lines on here. I'll just kind of copy and paste which ones we're closest to. I'm not going to copy and paste all these up here. So we hit that, right? Beautiful. And then look what happens. Right here is SMT. with NASDAQ. So if we pull up the NASDAQ, right, and this is the 1 minute, you can see right here, we actually made higher highs. Whereas for ES, we didn't. So this is SMT, and you can come see it on this chart here as well if you want. Let's go on the 5 minute. Zoom in. So here and here, make it red. And here and here. So we failed to take that high out on ES, and we just hit new week opening gap. So I'm thinking, okay, this is probably gonna sell off, and I missed this right here. And I actually was not. I was watching ICT's live stream, right? Or maybe it was his recap video. He didn't live stream today. I watched his recap video, and I immediately, for some reason, impulsively, I'll show you my executions if you want. I tried to take a long down here. I don't know what I was thinking. I didn't even see the SMT after I'd already got in. I got in like trying to buy turtles. I don't even know. It's just one of those trades where I was like, what are you doing, dude? Bought in the fair value gap right here, hoping this order block would support price. Just wanted to get in right below that candle, to maybe head higher. And I didn't even see the opening gap until it was too late. I took an L. I ended up entering here, getting stopped out below this candle right here, I'm pretty sure. Was it this candle? Yeah. So anyways, took an L here, okay? And so that set me back. If you want to look at my account history, I started this on Tuesday, a day late after everybody. So here's Tuesday. Started with 150,000. Put the account into drawdown, just like ICT said. I didn't get down to 3,000. It's whatever. I was gonna get back out of it anyways. So and the very next trade that day, hit a 5,500 trade. So, anyways, that was my second loss of from starting the account for 2K. And so I really just bought 10 contracts. I've just been buying 10. I haven't really bought maximum 15. Not trying to be crazy, man. So I took an L there. Sorry, drinking some water. Took an L there. Rushed in, didn't really do analysis. And I kind of chased through. You're in a premium. I didn't have the full picture. And so that's a lesson learned right there. I was a little anxious to get in. So let's keep going. So after that L, I took a step back and I said, okay, I'm just going to wait on a higher time frame, the 5 minute, and see, let's move the opening gaps out, and see what's going on. So my eye goes straight to this opening gap, right? Because we just hit that one, the one up above. So what can happen now? Well, we can probably come back down and retest this one, right? Because you like to see, let's go back. You see how they like to move between each other, right? Come up and hit, down, refer back. So I'm kind of thinking we took buy side first, and we just hit a new week opening gap, and we're in a premium, and higher time frame order flow is bearish, right? If you go on the 4 hour, right, big displacement down, we come back into this fair value gap on the 4 hour, reach into this balanced price range right here, right, tap into it, and the new week opening gap stops it in its tracks. So a lot of people might think this is a market structure shift, but look what happens. In our last video, I went over it. You want to see displacement out of here. So on a 4 hour basis, it's hard because you have to wait a long time, and you see what happened. But this isn't displacement out, right? This is just a liquidity grab. Even on a 1 hour, right? It does create a fair value gap, and that probably tripped a lot of people up. But for me, you want to follow the higher time frame order flow. And we've been bearish, at least I have, on ES, and I will show you why. Let's go to a weekly chart. Got alerts set. So we have this BPR right here, and I know some of you guys probably seen this from our last video, last live stream. I'm gonna go over it again. BPR takes out double top buy side on the weekly chart. Remember, this is a weekly chart. So we got BPR. We're in a deep premium, obviously, above these highs. And all of retail sees a trend break, right? They see this. Big old trend line breakout. They're going to see this as a retest soon. And I'm thinking we head down and take out these lows and maybe could reach down into this order block or these lows. Who knows? I'm taking it one step at a time. But this is what they see. But right? This is what retail sees. You see a breakout and a retest. But what we see, we don't use trend lines. We see a BPR and premium taking buy side. And so we're looking to short that. And so I've been bearish. We hit it 3 times here. 1, 2, 3, right? And you could even go back to the weekly and let's do the mean threshold of that order block right here from this high to this low. Right when we hit mean threshold, that's when the change in state of delivery happens. And you see we never hit higher than that. And so what I like to say, and I actually heard this quote from Currency Merchant. I don't know if you got it from ICT, but opportunities are born from a change in the state of delivery. Meaning when price goes from consolidation, right? Consolidation to expansion, right? When it changes that state of delivery from consolidation to expansion, that's where the opportunity lies. And you want to get in, right? So you could have something like this. This is just a crude drawing. You have your consolidation, manipulation down here, takes out the sell side and goes higher. Well, that's exactly what we had, just reversed, right, today. So let's go back. You can see it right here. We come above the previous day's high. Consolidation, manipulation, expansion, right? It's that same drawing. Same drawing right here. So anyways, I won't harp on it too much, but this is why I was bearish. Weekly time frame, you always got to start in the higher time frames. Don't want to get sucked in on these smaller ones. And this kind of looks like a sell model to me. We've been respecting these, look at the dailies on that fair value gap. Look at the bodies. We're respecting these premium arrays and we're using them to go lower. So, and even right here, you saw today, we respected this one right here. So that was kind of my reasoning for bearish price action. And so it was just kind of a dead giveaway when we took out buy side first. And it looked like a manipulation. So let's go 15. I'll review my trade why I got in. So right here, 2022 model. Okay. Let's review this. Now you're good. Welcome to class. Go and take a seat. So right here, right? SMT. So what does SMT mean? Smart money technique or smart money tool, right? This is SMT with NQ. See SMT? You see how the highs line up right here. So a failure to take that, you could have sold short on NQ, right? And ridden this move down if you wanted to. But look what happens. We come back up and anyone who was probably short up here probably got knocked out or got faked out long like I did trying to buy right here. So what I saw was this SMT and hitting a new week opening gap kind of gave me a hint after taking buy side that, we're kind of just consolidating above this level, right? And I'll make it big and bold so you can see it. It kind of looks like support, right? We're bouncing off of it. So what does that look like? It looks like it's smart money is holding price up here. So retail views this as resistance turn support, right? Because we bounced off it twice and now we've broken back above it, right? And now we're bouncing around on top of it and they think it's support and they're trusting that it's going to go higher, right? It looks like it's flagging up. So what do? They let them accumulate and they're going to accumulate their shorts and then they drive price lower, right? So it's important to not just delete these levels when they're taken out, right? Sometimes I do this, but a lot of times I'll just drag it all the way over or put an array that goes to the edge. I'll go over the new week opening gaps after this. A lot of times I'll put array and make it big and bold so it looks like support because you got to keep in mind, well, how does a retail trader think? And I traded retail for so long, so I know the patterns. I know I fell victim to all the traps. So we take buy side, right? It looks like support. And they bring it back into a premium one more time. And so when you take this high to this high, let's put a fib on that. Comes back up into OTE, right? And you could use this high. I like to use the high that started the move, or you could use this one right here. Either one. I used this one personally when I was doing it live today. And I wanted to see, there's obviously a fair value gap here, but that wasn't high enough for me. I wanted to see it come up and hit this 5-minute order block. So I had this drawn out on my chart. And you can go back in, look at my tweets when I did the before and after photo. So we drive through that, and I was looking on the 5-minute and the 1 minute because I'm narrowing in I'm not watching price on the 1 minute. You don't want to watch price on your entry time frame because you're gonna get lost, right? You could have taken this long, mitigation block. Like, let me just get in right when it breaks this high. Whatever you want to do, right? But we left these lows right here, okay? We left these lows, and that's way too clean. And so right when we started cutting higher back into a premium, I said, I'm targeting those lows. This just looks like we're rebalancing this whole move down that happened really quickly. And you see what happens when we hit this last up close candle before the move down, bearish order block. So right when we hit that, change in the state of delivery. The change in the state of delivery right here. And that's where the opportunity lies. And I got in a little bit too early. I didn't want to miss the move. So there's nothing wrong with that as long as you can get a good risk reward. So what I use for entry to get short after expecting bearish prices, because we've already gone over why I'm thinking bearish, I use this order block in OTE and, sorry, I got a text. I use order block in OTE, and then also, what do you see right here? Zoom in here. What is this right here? New week, sorry, volume imbalance, not new week opening gap. Let's drag that out. So we have a volume imbalance with an order block, right? And there's really no 5-minute fair value gaps or anything. But if you go in on the 1 minute, right? So let me just pull my executions up. So I got stopped out on this one right here. And I kind of knew, all right, well, we had a market structure shift, right? After liquidity sweep. And we hit into week opening gap. So all these pieces are starting to line up, especially after I get stopped out. I said, I'm probably on the wrong side. This is displacement with a shift. We created equal lows. So I have something to target now. And they're going to bring it back up into premium. So let me wait for a premium. So I start looking at premium rates. Do we respect this one? No, we literally closed right above it, right? So what I'm looking for is, all right, I'm going to go on the 1 minute, and I want to see us respect this one now. Because if we don't respect this order block in this volume imbalance, what does ICT say? When 3 PD arrays fail, you're likely to head higher or lower depending on your bias. So you want to see, I'm counting. We don't respect this one, right? Even though it's kind of at equilibrium. Let's go back to the 1 minute. So we don't respect this one right here. This 1 minute one. Knife right through it. Okay. So there's one down. We have this bullish order block we're kind of respecting right here. And I'm on the 5 minute too looking, I'm looking, do we respect it? And you remember, you have to use the whole candle. So I have on my chart, it's starting to get a little crowded. Let me turn the executions off. I have my chart also mean threshold of that order block, right? And so you can use the wicks or you can use the bodies. And if you look what happens when you use just the body. Right, let me get rid of the fib. Look at that. The candles don't close above that mean threshold, just like he teaches. They don't close above it. The wicks do the damage, right? So your stop, you don't want to put your stop too tight. I entered right here in the volume imbalance. And I'll show it right here. Right here. 40, 12, and 25 cents, right? What's the bottom of this box? 40, 12, 25. I entered right there. 10 contracts, sell 10, stop above this high, right on the high. So I have about a 5 handle stop loss. And I'm targeting 1 tick below these lows, right? And so that's where I got out. 1 tick below, that's a 2.5 R trade. So risking 5 to get 14 handles, just about. And I probably could have been a little, easier on my entry on a smaller time frame. And I'll show you how, in hindsight, I probably could have done that. So we have, come back up. Let's use the fib again for optimal trade entry. Right there. So we have mean threshold is this red line. Just do mean threshold, negative order block. And we have this fair value gap right here. The last imbalance before external liquidity up here. So this is the last imbalance, right? And so you see what happens when we hit this order block right here. Change the state of delivery to the tick, opening price. And I probably could have gotten in, I probably could have narrowed in my entry somewhere, maybe consequent encroachment that lines up with this mean threshold of the order block. Just look for some confluence points. You see how price kind of respects that right here. And it's struggling to get higher. And so when I saw that, I said, okay, it's creating the equal highs. This move kind of scared me a little bit, but not, I try to keep in the back of my head, okay, it's creating equal highs here. People think it's resistance. And once it busts through here, it's going to grab the liquidity, then head lower, right? And I was kind of trying to monitor it on the 5 minute. I didn't want to monitor it on the 1 minute because, you don't want to psych yourself out. You don't want to close the trade early. So I'm trying to monitor my trades on the entry time frame I use. And I use the 5 minute to get in. So I'm going to use the 5 minute to trail my stop and manage the trade. Because you remember, I got in on a 5 minute volume imbalance here. So let's go back to the 1 minute. Hindsight 2020, probably could have waited to this fair value gap or mean threshold of the order block or consequent encroachment or, perfect entry, this order block up here on the 1 minute. Either way, my stop was safe. I had multiple PD arrays above this volume imbalance that price had to get through before it came up and stopped me out. And the SMT and the new weekend opening gap already being hit gave me confidence to enter short up here after this big shift right here. So just like 2022, liquidity sweep, shift, price comes back, fills in the liquidity void from this move down. Once it's finally repriced, change in the state of delivery at this order block right here on the 1 minute. And then we head lower, right? And I get my parcels off here, took off 70% or 7 contracts right here. Sell or buy back 7. Let's make that sell side. And then now what I'm doing is I'm not even looking at the 1 minute. Look how awful that looks. I was kind of watching it to see, just practice tape reading, but I'm usually watching the 5. I'm only watching the 5 when I'm managing it. So what I did was, I'll take you through what I did with my stop. So remember, this is the fair value gap, M1, that's how I label it. And this whole, I'll get rid of this. This whole candle is the order block, right? So we never get past the mean threshold, which is this red line. Let's get rid of the fib. So it hits mean threshold of the order block. We start heading lower. I take my partials. And now what I've done is I wait, my stop is at break even still. It's all the way up here, or right here where I got in. I guess you guys know where I got in. I'll just illustrate it with this. How about that? So my stop's up here. I'm trying to walk you through it real time. I didn't record it live, unfortunately. So boom, take my partials. So I just locked in 2.55, right, for 7 contracts. And so now I move my stop. Once it hits this, stop goes break even, right? Like 2 ticks above. So basically above this candle right here. Because I'm thinking price is probably going to want to come back into this order block, right? Or sorry, not order block, fair value gap. So it's above this candle here to allow for that. And you don't want to see it go, above. You want to see it respect the consequent encroachment of that fair value gap. But price never even does that. And so you might be saying, why didn't I get, an entry here? Well, if you look closely, you already have a balanced price range that it has to get through first. And so right here, okay, between these 2 candles is a balanced price range because price has gone down, up, then down. And once it leaves that, it's balanced. And so you want to see that be respected, right? And it's okay if it fails, right? But if price is really bearish, it's not even going to want to come back up into this fair value gap. It's not going to want to let people who were long, right, or chasing that, they don't want them to get back in. So look what happens. Price hits the consequent encroachment and respects it of this balanced price range. And let's label that BPR. It's already balanced. It's already a balanced price range. And don't be confused with, this being, how they teach it, right? oh, I thought this was a bounce. This is a BPR. When it comes back up into these overlapping, it'll be balanced, right? It'll reprice into that. Then once it leaves it, it's a BPR. Okay, that's how it works. Once it leaves it, it'll reprice into it. Then once it leaves it, that's a balanced price range. Okay, so this is already balanced. Down, up, down. It's left. 3 passes. So see how it respects that consequent encroachment of that BPR. So I was looking at that, and once we took this low, my stop went straight above this high. Right? Let's do this. Red, 2x. Stop goes above here. Oh wait, that's not right. So now my stop's straight above here, and I'm holding the position. And I'm watching on the 5 minute. Remember, I'm not want to get. I'm glancing at the 1 minute just to tape read, but I'm getting my managing the trade with the 5 minute because that's what I entered on. So now, create an order block here. Price goes down, takes out more liquidity. I didn't trim anymore, and so you might be asking, how did I get these price targets down here? And what am I holding for? So let's go back to the 1 minute. Okay, shout out AM Trades. If he's watching, shout out AM Trades, T Trades for the projections I'm about to show. So if you want to learn how to target, I'm taking the manipulative move right here. And you probably could have taken something up here, but this is what I did. Manipulative move that took liquidity before the move, okay? I'm taking from here to here, this swing, right? Zoom out. Here we go. Okay, so comes down, hits the 2.5 to the tick, right? To the tick. And you see how it respects. Even the bodies are respecting this 2 level right here, okay? Then we finally head lower, boom, right into that sell side, because that's what I thought, that's what the draw is, right? I'm going for the draw. You want to try and line these up with a PD array or liquidity. And so right when it ticks me out here, look what price does. Comes back up in the BPR, respects the consequent encroachment of it, heads lower. And so now I'm looking, okay, can we hit the 4th standard deviation? Right? Can we hit the 4th standard deviation? And what else was there on a higher time frame to target? Well, you had this 15-minute fair value gap right here. So let's go back. So here's the 15-minute fair value gap, this big red box. And right at the top of that is the 4th standard deviation. And where did I sell? Right at the top of that fair value gap on the 15-minute. So my next target was a higher time frame PD array in discount. Because you never know. You don't know if price is going to reverse on. You don't know. Obviously, it looks, in hindsight, it looks like, nice, but this is NFP week. I'm not trying to get greedy. I'm not holding all day in this mess, right? Because who knew we were going to have a down 2% day, So I'm taking profits right when it hits this fair value gap on the 15-minute, right? So I took, I think 3 or 2 off there, and I'm holding 1. So I've already sold 7. I sell 2 more, and I have 1 left. And I sell at the new week opening gap right here at 39.88. So now I'm fully out. Okay, no runners. I'm taking my piece of the pie. I'm exiting. Am I pissed off that I missed this whole entire move? No, because I made my money and I got out. Right? I could have probably left a runner when I went and made lunch and went to the gym. But who knew this was we were gonna get this huge sell off, right? You never know. So I just get my piece of the pie, I look for my setup, and I exit. That's it. And if you want to go and see how I manage it, manage my stop, let me finish that off and we'll answer some questions. So stop's above here, and then we have the BPR. Once it rejects, look what happens. We hit this order block right here. Order block, change in the state of delivery. So we can go back through and look at the deliveries, right? What market conditions are present. So we have, obviously up here, reversal, right? After expansion, reversal, retracement, expansion, right? And you have little retracements back in here. We hit these order blocks right here. And each time on a smaller time frame, this looks like it's, reversing and going to go higher, but you have to manage on the time frame you enter on. So if you're entering on a 15-second chart, you might, not saying you can't manage on a higher time frame, but if you're entering on a 15-second chart, you're probably, you know, a high frequency trader. And that's just not me. I'm looking to catch maybe 1 or 2 big moves, decent size moves, and exit. I'm not going to sit here and take 10 trades, 6 trades. You know, my best days are when I take 1 or 2 trades a day. And I'm usually only trading the morning session. And so if you look at the times, right, you have a 10:50, 11:10. I could be wrong. I swear I think I had the macros pulled up. Unmute Mike. I need to learn more about the macros. I don't want to teach the macros because I feel like I don't really know exactly which ones are which. I swear there's like a 950, 910, or 950, 1010, 1150, 1210. I can't remember if there's a 1050, 1110, but if there was, that would kind of line up with this reversal, or sorry, this retracement and then sell off. So I don't want to go into it. I'll look into that. Hopefully ICT will do a video on that. But we hit this order block, and then once we break this low, this is now a valid order block. So my stop goes here, and then we come back up, right? Or sorry, we go straight down into my final target, and then I'm done for the day. But if I wasn't in, right, price comes back up, bodies respect halfway point of that order block, or sorry, fair value gap. Boom, so look at that, bodies don't close over. Hits the order block on the T. My stop would now go above this high. And so you could easily just keep trailing your stop. And then maybe once you hit this sell side, maybe take some off here. And if you look on a higher time frame, where did we end up going? Taking out this low and this low, and then we stop. I guess we just took that out. Oh, we just took that out today. Okay, new day. So anyways, that's kind of what I saw and why I was bearish. I would love to hear what you guys think. But you know, kind of looks like a market maker sell model as well. You know, you have this, kind of just saw this. I wasn't really paying attention. This breaker almost. Price comes up and hits that breaker as well. So it's fun to go back in hindsight. I didn't even see this. You know, I was kind of frazzled, you know, when I took this L here and I got in back up here, and I really was just managing this, but I already saw the BPR. I was already way in profit with my stop up here. If it came back and stopped me out, I already took 70% off down here. So either way, it was a fun trade, and it was fun to be a part of, you know, the beginning of the move. It's nice that when you sell at the top and you come back from the gym and you see this. So it's always fun. Okay, someone says there is a macro of 10:50, 11:10. Okay, that's what I thought. I swear it was like every last 10 minutes and first 10 minutes of the hour in the morning. But let's go over some questions. If you guys want, you can screenshot this or go back through and, you know, draw it up yourself. But let's clear. Okay. Let's do some questions. Indicator for highs and lows? No. Do it manually. I like doing it manually because you get a feel for, you know, what the market wants to do, and it makes you go into the chart and not be lazy. Especially, like, I tried a new week opening gap indicator. It just looked ugly to me, you know, and I like doing it manually. So I think ICT's newest video, I watched it last night when he came out with it. He's like, I like to put 5 new week opening gaps in my chart. Well, the one right here is like 8 weeks back. So it's like, how would you even see that if you don't do more than 5? So I think what I'm gonna start doing is just do 8. Because if you count them, got 1, 2, 3, 4, 5, 6, 7, 8. So if you look 8 weeks back, that's where you'd see that level, right? This is from Sunday, January 15th, right there. It's really tiny. It's literally only a handle wide, right? It's only a handle in, what do you want to call that, length? I don't know. All right, let's do some more questions. How did you copy and paste those lines in your chart from the other chart? I've tried to do that and it just copies the indicators. I'm not right clicking and then doing, okay, so if you hold down control and then click and drag, you can kind of select. All I did was select it, control C, or you can come up here and hit copy, right? Come back over here on this chart and then control V, and see how it popped up right there? There you go. Let's see here. How do you choose ES or NASDAQ when there's an SMT, and how do you know what direction? Thank you. So it just goes back to like, what's the narrative, right? We're accumulating. We take buy side first with this 830 news driver, hit a new week opening gap. After hitting that gap, what happens? There's SMT divergence. What does SMT mean? Smart money technique or smart money tool. And what does that indicate to us as smart money? It means smart money is actively trading. Why would they be trading? Well, they're accumulating a position, right? They're accumulating a position. So what does that mean? They're probably getting short up here because the higher time frame institutional order flow is bearish, right? There's a cracking correlation. That's the market tipping its hand to you. And that's when smart money is trading. They're accumulating shorts. So ES is showing weakness here because NQ made higher highs. And if you want, I can just show you on this chart right here. I don't draw NQ opening gaps. I kind of just look at ES and I'll look at the SMTs for the hint. And if you go to Dixie, I think Dixie's pretty choppy today, the dollar. But anyways, you can see right here, the lines match up, right? Higher high, lower high. And so that could have been a turtle soup sell right here back into here. But if you're wanting to short the weaker one, the one that can't take the high out, the one that did not take the high. So you want to short strength. Sorry, you want to short weakness and buy strength. And how do you know what direction? Like I said, it's just off the higher time frame institutional order flow, experience, knowing that. I mean, this is like basic 2022 mentorship. At 8:30, let's draw a line. I'm not trading till 8:30 or after, right? Because there's the news embargo. You get this big move off the unemployment number. What does price reach for? He says you want to go on the 15-minute chart. You want to mark out 8:30 with a vertical line, right? Mark out 8:30. Like none of this exists. Let's go back here. This is what happens at 8:30. This is what I see. What are the major highs and lows of 8:30? Where can it reach? Where can we get some like liquidity grab? Well, it's going to be above these equal highs and this low down here, right? So we're just consolidating. And yeah, we got like, this is maybe a little hint that we'd probably take the highs here along with the 8:30 opening being lower than the midnight. Let's go ahead and mark those out too. Like I said, you're piecing together all these puzzles. All right, so let's do one more bar so I can get the 8:30. And before we even take that level, right? 5 minutes in, or 15 minutes in, before we even take that level, what is it obviously reaching for? You have accumulation, manipulation on a smaller scale, but on the larger scale, right? You don't get too sucked in on the larger scale. What's it doing? Oh wait, I'm not clicking the wrong thing. There we go. It's reaching up, right? It's reaching for buy side. So when we take liquidity out, 2020 model, what are we looking for now? We're looking for go back up here. All my drawings. You're looking for a liquidity grab and then a shift, right? So right when we hit new week opening gap, took the L, my fault. We have a shift though with displacement, with fair value gaps. So that shows the market, that's smart money saying we're in a hurry. There's imbalances up here. Market's gonna want to come back up, fill those in. And you see we hit lower, right? So that's kind of how you pick the direction, and that is how you use smart money technique, right? You want to short the weaker one, the one that doesn't make the higher high. And that means smart money is actively trading. And when smart money, let's write this down. This is key. I can't remember what episode this was. I was going to post a clip of it the other day. It's on my to-do list. When smart money is actively trading. Actually, let's do this. SMT equals smart money is actively trading. which also means, right, when there's a crack in correlation between correlated assets, when the ES doesn't line up with the NQ after hitting a higher time frame point of interest like a new week opening gap or taking liquidity or a daily fair value gap like we are in, when there's a crack in correlation between correlated assets, that means smart money is actively trading. And what is likely to happen when there's SMT? SMT equals reversals are likely, right? Or have a higher probability of working out, okay? And that, I can't remember what episode ICT that is, but that means reversals are likely. And when there's not a cracking correlation and all the assets are moving together, like the Dixie's making lower low, ES also makes a higher high with NASDAQ, that is not when you want to be hunting reversals. That means all the pieces are lining up, the market's running smoothly, but when you get these cracks in correlation with SMT, right? When you get these cracks in correlation with the highs at a higher time frame point of interest like the new week opening gap, that means smart money is actively trading, and that's when the reversals are likely to happen, right? So you can't just be looking at one market. You got to look at them all. You got to look up the Dixie, and here's what my SMT divergence. I have a second monitor, so I drag it over, but this is what I watch on my second monitor, right? I have 5-minute YMs or 5-minute chart over here for the Dow, NASDAQ, and ES at the bottom, and then I have the dollar over here, and I kind of just switch between, higher time frames for the dollar. Look at that gap. So we came down and hit this fair value gap on the 1 hour, and that is pretty much what triggered the sell-off, right? So right about, here's the highest point, right? We hit that, and then the sell-off kind of starts around like right here on this move higher, and this red line, if you're wondering, is the consequent encroachment of that wick right there that we hit this daily volume imbalance, and we're kind of just sulking back into this daily order block. Anyways, that's not kind of what I want to go over, but this is what my SMT looks like, and this is what you need to keep in mind when you're looking to see when a reversal is likely, when it's not likely. You want to be trading when probability is on your side, and this is one of the ways you do that. Let's see. Garcia, do you check dollar before entering a trade? I've been using a lot more. Shout out Ben for putting me on the dollar, and some others. Let's see. Yeah, I look at dollar. Like I said, I have the dollar chart. I'm kind of moving slow through these questions, but I want to answer everyone in detail so you don't feel like you're being ignored. I'm not sitting here like, sometimes I look at if I'm in a trade on like the 1 minute, like I'll look on the 1 minute and say, okay, like how's it look? And I kind of just toggle back and forth between all of them. But I'm not sitting here like trying to match every single move with the dollar. But my eye will go to the right where I'm looking at this SMT chart, and I will start looking at, okay, I'll toggle between here. Like, are we making higher highs, higher lows? I'm looking at the dollar, making lower lows. And so that's kind of like what I do. I'm trying to use it a lot more, especially now that I see the power, that can be had with it. You want to trade when there's a cracking correlation if you're trading a reversal. What's up, Dan Dowd? Yeah, nice market maker sell model with the consolidation. Look how it goes to buy side to sell side of the curve on 1 hour. Yeah, man, you can see it. And that's another thing, like expecting these things to play out. Sorry, that is buy side. What am I doing? Ew, that's an ugly green. What am I doing? I'm retarded. That is something I like to look at, and I've been trying to use, the models more. It's honestly second nature now. Like, you're not going to get a reversal immediately. Sometimes you might, but a lot of times you got to see that smart money reversal set up, and they're going to want to bring it back into a premium before taking it lower after a shift. So yeah, it looks good. This is the 5 minute. Here's the 1 hour. Oh, you're talking about this chart. Okay. I see it now. What the hell is this thing doing? Yeah, nice model, dude. And if you line it up on the 1 hour, this is also fun about this. You can kind of just like toggle back and forth. Wait, what the heck? don't know why it's doing that. Anyways, you can kind of see, like, if I want to copy, I'll just, there's a gap there, right? And so you can toggle back and forth, hit the gap, and that's what triggers the sell off, right? That's the smart money reversal right there. But even on a smaller time frame, right? You see this sell model. Same thing over here on the 5 minute. Higher time frame point of interest. Buy side swept. Buy side is swept. And we hit new week opening gap, or previous new week opening gap, and it goes from buy side of the curve to sell side of the curve. So yeah, fractal, baby. Obviously, it went a lot further down than the original consolidation right here, or even these lows. It was hunting everybody. So yeah, I mean, you can even use 4 hours as your daily chart if you want. Let's go back to answering some questions here. We got, you fuck with my Twitter content? Appreciate it, dude. Yeah, I try and tweet when there's something to tweet about. I really just kind of do my own thing and stay in my own lane. I don't want to get in for all the drama. And like, I don't agree with everything ICT says about like his spaces. Sometimes he'll kind of go on like the doomsday rant, but you don't have to agree with everybody on certain things. His concepts work, that's for sure. The proof's right here. So yeah, it's been fun learning his stuff, and I try and put my own spin on it a little bit, and have my own fun, make new friends. It'd be nice. I want to do some interviews with like some traders in the Twitter community. And I want to, interview some like T trades. It'd be fun to have him on like a community interview. Kit, ICT concepts, just some people I interact with on there. It'd be fun to have them on and like hear their story, and whether they want to show their face or not. You don't have to get into details, but it'd be cool to see like how they found ICT, what they studied first, what order they studied it in, how they came to like get into Twitter and YouTube and why they do it, what they enjoy, what they don't like, what models they trade. It'd be fun to kind of go through all those things, and maybe people will find it entertaining, but also be able to learn and see like the real human side of like all this, because everyone struggles when they're starting, right? And so what you see online is not always the truth. Whether it's someone, I'm not talking just like faking gains. I'm talking like people, think that it's so easy to trade, right? I have people like DM me like, dude, like stop making it so complicated, like blah, blah, blah. I got a friend, I was talking to him about SMT divergence. He doesn't trade ICT. He's like, dude, I think you're looking too hard into it. Like, like when I was telling him about SMT, I was like, no, like whatever you say, dude. But anyways, like, I think it'd be fun to have like community interviews and interview some people on here, and maybe have like, I don't know what we would do, like if they don't want to show their face. I don't know if I haven't shown my face yet either, but maybe we'll do a face reveal or something if I hit 10K on Twitter. Who knows? That's one of the ideas I have. Do you flip your doing opening gap every so often, or have it on another screen? I literally only have 2 monitors, so on this screen, or on that screen you're watching right now, this is literally what my chart looks like. I'll have this hour, 15, 5, and I'll go up here and I'll hit like the daily sometimes and keep it up, or like the 4 hour, just depends on like what I'm looking at. But if I really want to like dig in on something, I'll just go on here on the daily and do it real quick, mark it out like fair value gap on the daily, fair value gap high, things like that. So that's one monitor. I only have 2 monitors. And then on my other monitor, it's just this. I don't change this to anything else. It's really just this one tab. Actually, and I have, I've had this on my screen. I've had IBM on my screen for like the weeks now, because this is why I've been shorting IBM since about beginning of February. I saw the setup here right after earnings. I was like, damn, it looks clear when I point it out. I posted this on Twitter, and to see if you guys wanted some option swings. This is the weekly chart. Like look how beautiful this is. We're consolidating all up in here. Finally hit this buy side after, all the way from June of last year. Sorry, June of 21. Take that out. And look what happens. It's even cool. Like it's even cooler on the daily, right? Smart money over. It's just super clean. Like boom. You want to see that. You want to see it take the highs real quick. Going to all-time highs. Psych, bitch. No, we're not. Breaker. Boom. Breaker. Hits the breaker. CE that breaker. Whatever you want to call it. Mean threshold. Tank. Earnings come out. They use an excuse to take it lower. Consolidate back into here. And if you go on the 4 hour, there's actually like a 4 hour fair value gap. Right here. Yeah, this is kind of what I was watching when I got in. I wanted to see it come up to the high of that. So there's a 4 hour fair value gap, comes up into it, and it's really sloppy. Obviously, it's, stocks. But I got in like, I think around here, or maybe like right here. I can't remember. But I did get some drawdowns down like 10, 15%. I got like the 130 puts for April. They're already in the money. I'm taking some more off here. I took some off here on this day at like 50%. I think I'm up like 80% now. Should be 100% probably when we get down here. And then obviously I'm holding for the boys all the way down to here. Equal lows on the weekly. So once we break that low, I'm just going to sell. I'm going to monitor how we do at this gap or this volume imbalance and, these lows. But on the daily, what is it reaching for? It doesn't have to take out this neutral consolidation. That's why I'm taking my last, another 1/3 off here. But I'm going to take the remaining 1/3 off, or I might scale some more down here. Who knows? But this is what I've been in for like about a month now, up around here. So yeah, beautiful chart. Works on stocks too. And I've been trying to get into swinging options using ICT concepts. I think it's a lot of fun. Let's go to next person. But to answer your question about the new equipment gap, I literally will just flip to my chart here. And then when I see where we are, like in relation to what we're close to, I'll just go back and, copy it, come back, paste it on here, and it'll pop up, wherever we're close. But I'm constantly switching back and forth, between tabs. Like I'll refer to this. I'm telling you, this was a game changer for me. Just going back. This is like month 1 core content. Every day, just go back, separate your days with a vertical line. I have Sunday split into its own little day. I don't even do the highs for that though. Just the weekdays. And you'll see like, okay, Monday started right here. High of the week Monday. Boom, sharp drop. So obviously we're gonna have consolidation, manipulation, distribution, right? So like there's a narrative and there's a weekly profile. It's easy to keep up with. If you want to make it even easier on the weekly profile, do this. This is what I'm going to start doing when I get off this stream. I'm going to do this 4 hour on ESH 2023. Hold up. Let's just do it on. Well, anyways, I was going to do this. I was going to go on the 4 hour, mark out just the weeks. So let's go back let's do like these weeks. So vertical line, vertical line, vertical line, vertical line, back all the way to October, right? Go to the 4 hour. So now I have it split up into weeks, right? October. So see how it starts on Sunday. And this is the 4 hour chart. This makes it a lot easier to look at weekly profile. So let's start with this week right here. Week opens Monday, high of the week Tuesday, right here on this day. Look, week opens on Tuesday right here. Comes up, high week Tuesday profile, classic sell profile. Monday, Tuesday high week, market sells off. Thursday low week, and then we consolidate and close a little bit above the low on Friday, right? So it's a lot easier to like keep a nice week. If you want to look at weekly profiles, this is what I'm doing. I'm marking out the weeks and looking at the 4 hour, and you can see maybe I'll do like a horizontal line, but I'll make it like dotted, right? So I can see the days, maybe barely. That's like, I can't see that, but that's kind of what I'm looking to do coming up is classic sell Tuesday, high week profile. So yeah, if you're like, I'm telling you, it's a game changer when you can look at narrative from a bunch of different perspectives, right? And it all adds to confluence. It all adds up to get you into the right bias, the right narrative, and eventually the right trades. Final target went right to new week opening gap you missed. What do you mean? So I'm going through these slow. I got in, I got out at the final target right here. See? That was my final target. If you're talking about all the way down here, I'm not trying to be greedy. I'm just going to get out with my profits right there for the day. I took the L, bounced back right here. And this is just trading 10 contracts. I'm not over going crazy with the 15 ICT is. 12 back should get the full IPDA, 26, yeah, 20, 40, 60. Oh, we hit new week we got from 1.8. Okay, 12 weeks back. Yeah, and so I guess that would be like, if you do want to use like an indicator, like I think I was trying this one out. And you can come up here and like just like crank this thing to like 12. Yeah. See, so maybe if you don't want to manually like, sorry, I didn't save it. There we go. If you don't want to like save it and use it during the day, because I feel like it can be kind of messy. See, like the manual ones line up nice. But I like having a clean chart. I don't like having these all the way over. And I feel like it can be kind of messy. So, but I mean, like, to get be profitable, you don't need to have 20 new week opening gaps on your chart. Like, you just read the main narrative, where price is drawing to. And this, it might be nice. I'm not going to tell you how to trade. Do your thing. But for me, this is just what works for me. Just copying and pasting, because it forces me to get my hands in on the charts and to use my brain, right? It's not just an indicator, easy toggle on and off. Like, I got to look at it. And that's what I like. Okay. Let's see. You watch SMTs on the 5-minute mainly? Yeah, I'm usually looking at the 5-minute. Like when I'm looking at my SMT chart, obviously it's hard to see now because of this big sell-off. But like beforehand, it was like this, right? So it's easy to see. And obviously I can come over here and I just double click and it's got my, obviously it's kind of, like I said, it's harder to see when it sells off like that. But yeah, the highs are easier to see when you, what the heck? Oh, I'm dumb. Anyways, the highs are easy to see when you come over to this chart, or like I said, that's why I have this dual chart saved up here. It's literally just, I keep it clean. It's literally just when I'm in a trade, even on the 1 minute, I'll look at it and I'll be looking at it like I'm managing my trades on the main execution screen over here. I'll hop in or place a limit, right? You can use this or the DOM, whatever. I'm executing on here. I'm looking at the 15, the 1 hour, right? This is why it's called precision, because I'm kind of narrowed in on this chart. And this is where I'm doing all my executions. And I'll easily just flip back and forth real quick. If I'm looking for SMT while I'm in a trade, it's usually this dual chart right here. But I also have my second monitor where I can look at the Dow and the dollar as well. But yeah, I like to see SMTs on the 5 minute. I'm not really going on the 1 minute to look at SMTs unless you're like a high frequency trader. That's just not me. Do you backtest on TradingView or do you just mark up your charts tape reading? I don't really backtest anymore, to be honest. I watch this every day live, so I'm like, I guess you call it forward testing. I don't really backtest too much. How long are we going for? An hour? Okay. I don't really backtest too much. I've just been in the charts for so long now. I started trading ICT like middle of summer, I think, when I moved back down here. Yeah, middle of summer. Started trading ICT after, I remember the day I found it, or the day I didn't find it. It was shown to me. I was in a Discord server called Five Rivers, and it was like a bunch of, everyone's trading retail. Like some big like Twitter Furu guys are in there. And anyways, I was like a big like admin guru playlist guy, whatever. I was posting my charts, people liked it. I got promoted to like this options floor, and I could post plays. And I remember coming back from like my little break of moving, finally got my desk set up, internet, hooked it up, and everyone was like talking about fair value gaps. I was like, what the fuck is a fair value gap? And we were using this little indicator that would show them that every single fair value gap would be like yellow, like this. It looked like this on your chart. This was a yellow thing like that. And it would be everywhere, like here, like it'd be every single fair value gap. And it was all I knew about it was like, oh, people were like, yeah, they like to get filled. I was like, well, how do you know when it's going to get filled? And they were like, I don't know. And people were literally just like trading, like gambling off it literally was gambling. We were like, all right, we're going to sell here and hope this one goes down because it looks like it's going down to fill this one right here. And we're just going to like hop in with resistance. And it was working. And I was like, how the fuck is this shit working? And that's when I found, like, I started looking at the videos of ICT because I saw the fair value gaps actually working. And I was like, okay, this is like weird. Let me look into this more. And that's how I found them. But no, I don't really back test anymore. I have a Discord, just me in it. I'll show it to you. It's literally just me posting recaps like 24/7. Like I got hella recaps in here, bro. So every time I take a trade, sometimes I do like a breakdown, like of the whole morning, right, with projections and stuff, and it'll hit. But like this is like my back testing, like today, like here's today's, right? Inversion, so I didn't even mention that, inverted fair value gap right here. And then we also invert off this one too with the order block. Like it's just super clean, dude. You can't deny. Super clean. But I don't really backtest anymore. I've just been doing it for so long now that like I don't really need to. And I watch it live. And I'll do things like this where I sit down with you guys and go over my trades. And it helps me. It helps you. And when you teach it, you learn it twice. So the fact that you see the exact model I'm mentioning on 1 hour on the 5 minute too, yeah, that shows it works. Thanks. Yeah, WIBM trade. Shit's printing right now. Missed the new opening gap, saw it break the event horizon. Yeah, the event horizon is what I'm trying to like implement a little bit. Here's like the 50. And so you see once we kind of break away from that, let's put it like right there. Once we kind of hit the gap and kind of get away from the 50% right here, it just like magnets like down. And then I guess we head to these ones down here that aren't shown because I don't have the indicator anymore. But yeah, the event horizon is something I had to study up on. He's got a tweet, ICT does, where he explains it. Here, let me pull it up. Let me see if I can find it. It's on Twitter. I think I quoted it. I'll just do from. If you didn't know this, you could do from I am the ICT. Just look up horizon. Look, boom. There it is. Every single tweet that he mentions the word horizon in it. An ICT event horizon PD array is halfway between the new week opening gap and the closest new week opening gap. That's the event horizon. It's not gonna allow price to escape the draw to the new week opening gap, and will create a surge towards the new week opening gap it got too close to but hasn't yet reached. So it's almost like gravity or a black hole, right? It's like these new week opening gaps. So once it breaks, I guess you would do just not the CE but the actual gap. Once it basically breaks that horizon, I'm assuming, it's like I said, I don't want to teach it because I don't really know too much about it. I gotta study it more, and I'm not gonna teach you guys like shit I don't know. Like I pretend like I know everything. I just know what works for me. Yeah, more than 8 weeks. Like just get that little indicator and you just toggle it real quick and see like what's near there, and then if it really like looks like it's, you know, price is reacting nicely there, then it probably is still, you know, that gap's probably still working and it's still Important. Yeah, days separated by midnight to midnight. Yeah, I'm not, when I'm going back doing this, I'm not doing it on midnight. Or I guess I am. But you don't want to go on the daily and put it on the daily candle, because watch what happens. If you, like, if I go the next day, right here, go back to the 15 minute, it puts it on Sunday at 1800, right? Or actually, I guess that would be Sunday. But yeah, I'm just going on here on the 15 minute, and I'm just going to the 00 and Alt V, or doing the vertical line, wherever the tool is. Right here, Alt V, and then boom, boom. And I'm gonna do one for tomorrow. Let's do one for the 15th. Or I guess it'd be Friday. Sunday. And then Monday. Look, already got Friday set up. So you know, like, if price is just consolidating in here for a whole day, or let's say like you have highs that need to be taken, you haven't taken a high yet, you kind of know like how much time it has left to reach its objective, right? And that's why it's nice to toggle back and forth, especially like I said on the 4 hour when you're looking at the weekly profile. Like let's say this is like a week from here to here, right? You know that if the objective is like these lows, right? And let's say price is like gone up, taking these highs, and it starts giving you hints like right here, this hint lower, and this is the objective. And let's say the weekend's like right here, you know you have like a limited amount of time to hit that, so it's going to be in a hurry. Like this isn't actually like a real week. I'm just showing you with the candles. Don't even look at the time, but you know like price is going to have to hurry if this is the objective down here. So you might have a trend day, or you might have a huge sell-off that like this that you don't want to miss, and so you'd be looking for that. Could you please show how you find the bias for the day? Yeah, I kind of did this in the beginning. If you join late, I'll kind of just go over what I look for. I'm not gonna do the whole thing like I did. You can go back and rewatch it, but I'm looking at this chart, right, where I mark out the daily highs and lows, and price was about right here at this red line. Actually, I can just do the replay feature. This is what price looked like when I logged on this morning at 8, sat down at 8, or 7:15 or 7:30, whatever. And I don't trade till 8:30, news lifts. So, I mean, price starts printing, and on this candle right here, the news came out, 8:30. Take the highs, right? And so that is a not good if you're bullish, because you want to see it take the lows first, right? You want to see some something like this. If you're going from his 2022 videos, you want to see it sweep the lows and then go higher. So you have your accumulation, you got your manipulation, and then you got your distribution. Let's use that right there, right? So you didn't see that right here. You didn't see these lows swept. You saw the highs swept. And what happened when we swept the highs? Boom. So it's just this inverted. So flip this upside down. Like that. And then you got that. Right? Art class. It's just this inverted, right? You have your accumulation, manipulation, distribution. I can draw it for you right here. Here's your red box. Here's your gray box. And then you got your purple that literally, you know, you get the rest. Goes down, 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 down. So you got to know what conditions you're in. And you don't want to trade in the consolidation. You want to trade when there's a change in the state of delivery is when the best time to trade is. Or you can get in like maybe on some continuation, right? But you don't want to chase. Like this thing could run back up after taking sell side and knock you out. So like if you miss a move, doesn't matter. Like I'm not pissed I missed this. I got my piece of the pie. You can't catch every single move. Yeah, everyone's origination story. So let's see. I'll answer a few more questions. I don't want to make this too long because I want people to be able to go back and rewatch this and not be too long, like an ICT video. What time do you look to see market maker buy model, go sell model? it works on all time frames. So like if you're on the 15 minute, this just kind of looks like, you know, curl. But if you go on like the 5 minute, it becomes a little clearer, right? Becomes a little clear. You start having this buy side, and then you see we kind of start to stall, right? And so we have a shift in market structure with displacement categorized by this fair value gap being formed here. So that's making my eye go where? To this order block. It's in a premium, right? Above the 50. Comes above the 50. We're in a deep premium in OTE. OTE. And you can extend it out. Let me extend it out. Right? Hits the order block. Respects mean threshold. We already went over that. Right? And then that's when the change in state of delivery occurs. So that's kind of like what I was looking for. You can go in the 1 minute, right? And you can see it maybe even clearer. You maybe see it in clear. You know, you have your I mean, I guess you could call this like your, you know, here's your first little, get in there. I guess it'd be your blue. Another accumulation stage, right? With fair value, and I'm just kind of drawing the boxes, but you see the fair value gaps and the new equity gap and stuff. And then you basically have your smart money reversal up here with the SMT that we talked about, right? SMT. Remember? Oh wait, I don't have the. Let's go to the 1 minute and I'll show you. See these highs? They are different. One has been taken, one has not. That's smart money technique. That's smart money is actively trading. That is when reversals are more likely to work out in your favor, right? Where is it? Boom. See that? SMT. So this would be smart money reversal. Okay, or SMR. Accumulation, reaccumulation. And now we have, boom, smart money's already short. Okay. They're short up here. They're not going to let it go back above. They're short. They're going to protect this level. So price shifts. That's when the light bulb in your head should go off. Right? Ding, 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 ding. Market structure shift. Time to short or look for short opportunities, right? Especially after we hit new week opening gap right here. After SMT, after taking buy side first. And so you start adding all these things together and it's starting to look like this has been buy side of the curve. And now it looks like we might be hitting sell side of the curve after this shift, right? So you're not going to want to see these highs be broken because they've already accumulated short up here. They're letting everyone chase. Remember the buy side level I talked about looked like it was supporting price, hits it up, hits it, comes back up, hits it one more time, comes back up and almost looks like it's resistance, right? And so they're letting the longs pile up here. They're letting retail buy long, trusting this as support. They're accumulating their shorts. They're selling into those people who are buying at a high price. And now they're going to go offload their shorts and buy back their position to willing or unwilling buyers on the sell side of the curve, hunting sell side below lows right here. All these lows. So, hope that helps. About the MMXM models. MMXM just stands for market maker sell or buy model, if you guys were wondering. Appreciate your time. Enjoy your live streams. Yeah, no problem, man. I'll try and do these. I don't make them too long. But I know you guys enjoy them, and it'd be fun to go back and rewatch some of these, especially like for new people. Refer them back to certain topics. How do you dial down from higher time frame to lower time frame for fair value gap? Which one do you look to more, say 5 or 15 minute value gaps and then 1 hour fair value gap? How do I use fair value gaps like that are like nested, maybe is what you're trying to ask? Is like another way of asking. Let's do this. I could find an example. Delete all this stuff. Back to my 15-minute. And let's put my line. Okay, so like right here, let's do something like this. Let's do like, I mean, you have like a fair value gap here, right? But on the 1 minute, you have two. So like, how do you know which one to use? Well, you don't want to use this one because it's in a premium, because you have your 50%, right? High to low. Using the low that started the initial move. And you can see when we get into a discount, right, at EQ, look how the bodies respect that level at 50%. They stay above it, right? And what happens? Price comes up to this, fills in this fair value gap almost, right? It's this 1 minute order block. And the change in the state of delivery happens again. This is also the CE of that opening gap, remember, that he talks about right here. You take a fib from here to here, there's 50%. This line right here is the 50%. It hits that plus that 1 minute order block you can't see until you go to electronic. So this line is the mean threat, consequent encroachment of that gap. Here's the premium discount of this swing. Here's the CE, here's CE of that fair value gap on the 5 minute. So like you have all these like POIs lining up right here, and you can see how price behaves when it hits that. So that's kind of how I use like a higher time frame. Yeah, you have this, but if you want to narrow in your entries and get like a nice precise entry with a tight stop, you could basically just enter right when it hits the fair value gap. You could wait for price to come back into a equilibrium or discount, whatever you're comfortable with. It all depends on what you're doing. So let's say you don't want to long and a premium. So let's say you enter right when it hits the discount, right? So my stop would probably go either here, that's pretty like tight, or I'd probably just give it like a 5 handles. It's like right here. That way, if it wanted to come down and like maybe like tag this tiny fair value gap or something, it could. You could fill in this volume imbalance right here. And it might go a tick or two lower because there's another volume balance here. Or it could maybe want to come back in and use this as like a fair value gap support, right? So maybe I'll just give myself 5 handles. So you never really know. It's all depends on what your tolerance is. But, you know, if you're shooting for the new week opening gap, go for that. Go for this high. It's not even a 2R trade. But let's say you're just doing the 5 handle model that he talks about, 1-to-1. You would have got that easy if you would just enter it on the premium, right? 5 handles, risking 1-to-1. Your win rate's going to be pretty high. 5 handle happens so many times throughout the day. I'm sure we could do a live stream all just trying to find and count how many 5 handle moves there are that are valid. I'm sure you'd find a ton. So in the market structure shift, your narrative is what overrides it, likely just being a turtle soup. Yeah, but drawing liquidity is what matters the most, in my opinion. And then you add on market structure on top of that. Like, drawing liquidity is determined from narrative. Narrative meaning what's happening. Well, smart money's accumulating short up here. Retail's buying, right? They're chasing or they're getting stopped out. And they're, the narrative is smart money is selling short up here into these buy stops, and they're going to offload them to sell side. They're going to buy back their position with all these willing sellers down here. So in discount, that's narrative. And that's how you kind of determine bias. So like when we come up, we break this high and we keep going higher, right? And then we just have that shift with displacement, and we create a double bottom right here off of, right here. We start coming back up higher into a premium. That's when I'm like, okay, this is way too clean. And it's kind of confirming to me at least, that, you know, SMT, new week opening gap, will probably trade back down to this new week opening gap. I'm trusting this high not to be taken. And look what happens. You know, we tank. I get my partials here, and we hit lower. So narrative, important. It's how you get bias. And, you know, you always want to be trading in higher time frames, so don't forget that. You know, you don't want to get sucked in on the 1 minute. I'm usually staring at the 5 minute on this chart, 15 over here, hourly, and then I'll switch between like a 4 hour sometimes or the daily just to mark out points of interest. But I'm not really watching those two that much. Obviously, I look at the daily when I wake up, but only for a couple minutes to mark out some stuff. But it is cool to glance back at just to see, you know, what the candle has done that day. So like up to this point, when we're up here, the candle is green and it's up in this, let's clear this off. The candle's green and it's up in this daily fair value gap right here. So like I'm expecting, after taking buy side first, I'm like, okay, we're digging up in here. You know, it's almost like it's a balanced price range too. It could create a balanced price range. Doesn't even hit CE of it. So you're looking how the daily candle's forming. So that's that power of 3 concept that people are using. Not people, but, you know, everyone's using. And I can go over that if you want real quick. Power of 3 is literally just open high, lower close, or open low, higher close. That makes sense. So here's midnight. So this would be, like, see how the daily chart's kind of funky because it's not going to show you true midnight. It's going to show you the price at, you know, 1800. So, but we use true midnight. And you will see how price right here comes above midnight opening price. Okay. Comes above. So that's creating this wick right here. See how the lines match up? Midnight comes up. The daily candle's going up green. And then you see the change in the state of delivery, the smart money reversal, and it creates this big down day, right? And so we end up coming down all the way to the low of the day, which is this candle right here. And then we end up closing right there. Oh, wait, hold on. Where's this 16? Around this area, right? So it's not exactly the low. So that's how that bottom wick is created right here. Same with the top, but the opening is actually true midnight. That's what we're referring to with power of 3. So it'd be something like this. Today was, you have open. The wick is created to go higher. Big down day. And then price comes back up and closes. So you have, let's just create it right here. Open, high, low, close, right? So that's when you see people say open, high, lower, close, that means they're referring to a bearish candle like this, a big down candle like that. Hold on, let me do this. There we go. Now you can see it in here. So this is what they're referring to. Power of 3. Open, high, lower, close. Open, high, low, close. Referring to this big red candle. And it's the opposite when you're doing a bullish day. So this is like, for a bullish day, you'd have this, you have your accumulation, right? That'll be the gray box we drew earlier. Your manipulation. And then you have your distribution. It's that purple box we do, remember? And here's like a quick. So then you have the manipulation, the distribution. Okay? So that's literally what power 3 is. Accumulation, manipulation, distribution. Does that make sense? So if anyone has any more questions, go ahead and ask them. I don't want to make this too much longer. Hope you guys enjoyed it. I have fun teaching the concepts I know really well. I'm going to learn more about the event horizon. Maybe, I don't think anyone's made a video on that yet. Maybe I should make a video on some event horizon or new opening gap. But if no one else has any more questions, I'm going to leave you guys to it. We've been on here for about an hour 30 now. That's about all the time I really wanted to go on. If you want more, go ahead and subscribe. I'm going to try and do a video at some point, like an actual edited video. But I like doing the live streams as well because it's more laid back. It's more chill. I can answer questions, interact. And they're just fun, you know? So, yeah, thanks for stopping by, Bobby, Derek, Xavier, Dan, Steve. I'll see you guys. Adam, everyone who asked questions, Nick, William. I'll see you guys. Robert. So if you guys enjoyed, just go ahead and drop a like, leave me a comment, let you know what you thought, what I could do better. But I enjoy teaching and just trying to pass what I know forward. So video on failure of, or power of 3 is probably what you meant. Yeah, no problem, guys. You all have a good night, and I will see you guys later.